updates on Chinese regulations and China's development? Does it matter when there's massive fear? But short sellers turn every news into bad news. PBOC has emphasized on stability in monetary policies and aimed to have a stable economy via its policies. Few days of reverse repos have been done, meaning injecting short-term liquidity into China's system from 4th Jan all the way to 6th Jan. This comes at a time when Federal Reserve is signaling a more hawkish tone. Look at this news report where Federal Reserve puts wheels in motion for balance sheet reduction, and the officials from Federal Reserve have mentioned that they could aggressively dial back policy help. As mentioned on my Twitter, rates compression between US and China's 10-year bond yield is approaching 1.1% to 1%. Very significant development. It's clear that China's economy is under pressure with growth slowing, and Li Keqiang, Premier of China, on 5th Jan 2022 pushed ahead with tax reduction. People Daily highlighted that Economic Working Conference will focus on stability and have an adaptive policy to meet challenges in the market and economy. It was highlighted specifically that the working group noted the risk to the economy arising from COVID and external environment being challenging and increasingly complex. Macro policy is to be stable and effective. Micro policy has to be sustainable in encouraging market-based activity. Technological policies have to be executed steadily and firmly. And it was shared that Cyberspace Admin has stated very clearly that Chinese companies with more than 1 million users will have to obtain approval for data security clearance before they can apply for overseas listing. In their Q&A, Cyberspace Admin emphasized that they continue to support overseas listing. There are 3 scenarios where the first scenario, listing do not require data security review. The second scenario, they will review and approve for listing the application. And third, they will not approve the listing application for overseas listing. In terms of data security review, the rules cover the handling of data collection, storage, usage, data extract, transform, and load (ETL), and sharing of data, etc. Such rules will be effective from 15 February 2022, after Chinese New Year. Cyberspace Admin's recent rules are still deemed unclear by non-Chinese media, as they wonder if Hong Kong listing is considered as overseas listing. And furthermore, despite clarity on no longer banning VIE structure by CSRC, non-Chinese media continue to wonder if Beijing considered such structure being legal. It's the official news from CSRC that I last covered. To me, it's clear that the VIE structure is not to be banned. This was reported in the Chinese media Global Times as well. CSRC Vice Chairman said draft rules will be fully issued in a month, which goes into February, and this aims to plug loopholes in overseas listing. CSRC Vice Chairman even quoted the case of SEC, Securities Exchange Commission of the US, asking CSRC for help when there is an accounting fraud concerning Luckin Coffee. But the problem arises when Luckin listing did not go through CSRC, and CSRC is not even aware of Luckin Coffee listing. Consistent with China's directive to remain steadfast in technological reforms and to be executed steadily, several departments including PBOC, Cyberspace Admin, SAFE, etc. are working together to ask for public opinions concerning the distribution of financial products distribution via internet. Note, this may potentially impact on Futu and Tiger, so we have to watch out very carefully for the future news release on this particular matter. Cyberspace Admin also has new regulations to improve algorithms services so as to avoid unfair competition by the big tech, meaning Alibaba, Tencent, and other companies with lots of consumer data, so that when they actually monitor such algo services in terms of how such companies fine-tune the algo, they can avoid unfair competition. But market do not perceive this nicely in a way that Alibaba, Tencent share price have been hit. Some more, there's fines of Alibaba, Tencent, Bilibili coming into early Jan 2022. And the question to think through right now is, are they rushing to complete the tech regulation before Chinese New Year? Or is there any inconsistency within the various departments like CSRC, PBOC as one group, and Cyberspace Admin, State Administrations for Market Regulation as another group? We have to think through such questions. Though this messaging by State Administrations for Market Control would raise a red flag, it's nevertheless important to note and monitor if there are future collaboration coordinated by CSRC, where at least recent collaboration between various departments concerning PBOC, SAFE, Cyberspace Admin, CSRC show that China is working together to make all departments work all together. Another red flag concerns Evergrande being issued a notice to tear down 39 buildings at Hainan Ocean Flower Project amidst global coverage of Evergrande liquidity issue, and not forgetting that Evergrande has a $300 billion of liabilities. Why would China do such thing at this moment? This is just some news coverage by Guardian writers. As for Chinese tech stock investors, we have to watch out if there are any inconsistent signals from China, which may reveal that there are some competing powers within China. This is a potential risk for economic policies execution, and we have to watch out very careful for this. And of course, we know that Mr. Xi Jinping is likely to continue to extend his leadership over the CCP in the coming 5 to 10 years period. Question to think through now is if China is rushing to complete tech regulations before Chinese New Year? If yes, this will be positive. If no, then I will not be rushing to add Chinese tech stock aggressively. If yes, that would be good, given that China likely to be adopting a looser monetary policy with lower interest rate and more liquidity into the Chinese economy. And with clarity or completion of tech regulations, this will be good for investors' confidence, and not forgetting that US tech stocks are under pressure right now, giving a potential rotation into Chinese tech stock. But that is only possible if China regulation in terms of tech reforms have completed. But it seems like for me to bet on an end of tech regulations for China tech companies will be too early given mixed signals for Evergrande scenario. So I will continue to only add selected tech stock with good balance sheet and cash flow and with good growth prospects. Note, I will only slowly add such shares. As always, this should not be construed as any investment or trading advice.